Probably 5 minutes, everybody. I heard the silence and I wanted to break it a little bit.
Thank you very much for joining the stream. We'll be live in about 5 minutes. Thank you so much for hanging by and your patience. It's your time. Say some jokes. And then I'm just waiting for that.
So everybody knows that Albert Einstein was a genius, right?
Yes.
His brother Frank was a monster. That's my clean joke of the day right there. Frank Einstein. Say what? No, so we're recording live on the equipment that's streaming it out to the world. On YouTube, Instagram, Facebook, everywhere else. Not LinkedIn. No, not LinkedIn. Craig, did you hear my joke?
Something about Frankenstein.
Said everyone knows Albert Einstein was a genius. His brother Frank was a monster. Frank Einstein. I got a laugh out of that. Bob, you got one?
No, my jokes are
Troy might have one.
Up but never comes down.
What is it?
That's a good one, but it's rent.
Rent. Bob, you're gonna start.
Yeah. Yeah, you can move it.
Thank you so much. Welcome to Dovetail Commercial. We'll be live. 5, 4, 3, 2. Still got your tea?
Yeah, let's go. Hey, welcome everybody. So this is one of our series events, and this is focused on investor financing. Our last seminar was on the Burr method. I thought that was really, really informative. Today we're going to talk about LLCs and why LLCs are used for investor financing. So just to kind of start off with some questions and answers with our panel. So to my left is Troy Robinson, investor extraordinaire. And then we got Paul McRae from Sync Law. He is also an expert in commercial entities and contracts and all that good stuff. So the first thing I think we should probably start off with is why an LLC? So which one wants to take this question? Why an LLC for investor financing?
Mine's easy. Ultimately for me, the foundational piece of it for me is to limit my liability. I mean, that's the frankest piece of it. It's very suitable for why it's called what it is. And as a person that has a portfolio, growing and developing a portfolio, I want to limit the risk between each asset. And so for me, deploying a multiple LLC strategy is something that I found very crucial as I begin to grow and expand.
Any thoughts, Paul?
No, absolutely. It limits your liability on your projects. A lot of investors create different LLCs for each one of their projects, so they can separate those properties from each other. I think a lot of it has to do with the lender. A lot of lenders require the property to be closed and deeded into an LLC prior to funding. So, and a lot of lenders will not close unless it is in an LLC when you're doing a fix and flip, when you're doing a non-owner occupied property that you're going to purchase and acquire or purchase and sell. So they require it to be in an LLC, and a lot of those, one of those reasons is it's easier to, and Hussein's here, that can correct me if I'm wrong, to foreclose on those properties. It's a lot easier for the lender to foreclose if the property goes south on the LLC than it is on an individual. And that's because the state of Massachusetts has very strict foreclosure laws, and a lot of them protect the homeowner, especially if it's owned by a person and not an entity.
Yeah, so that's a really good point. And you know, when you're talking about liability, right? That's key. I really like that point. You said investors love or require them to be in an LLC, and that's a really good point because when you think about investor financing, we talk about, you know, this isn't reporting on your credit report. This is on my end, but there's more to it, right? But the liability and obviously the lender's, you know, opinion is really important. Yeah.
So even when you say, you know, we just touched on it lightly there, but not reporting on your credit, that's a fundamentally, again, a huge piece of it. Is a difference between building a residential portfolio versus a commercial business investor type portfolio, right? On the residential side, you buy that FHA, you buy that regular owner occupied, that's going to sit on your credit. It's going to be fundamentally based on you as an individual and your financial performance. In the investment world, as we go into an LLC, you're equivocally in what you are doing is you're starting a business, right? You're registering a company. It's going to transact in housing, right? It's going to receive rents, equivocally usually, of either short-term or long-term rents. And the offsets of the expense in this case is your mortgage expense, your upkeep, your maintenance, right? And so you're really creating a business. And so understanding that the loans in that world are fundamentally based on that business's ability to not only generate revenue but actually operate. And so that's where it comes into when we talk about a lender being able to foreclose on that entity is they may know how to operate that business. You may not be doing well at that. And so we just want to take over the business. And it's a lot easier to do, to Paul's point, when it's in a business and not someone's name. And so that's fundamentally an easy way to designate that. But I think understanding that when you're talking about scaling, not having that report on your credit is helpful. It's obviously a piece of, it's an asset-based lending type model that you're using when you're using these entities. And it's a way to go ahead and be able to scale it from a monetary standpoint and not be looked at from just personal income. So
I have, again, I'm not claiming to be an investor, but would you have one LLC for multiple properties, or would you recommend having an LLC for each property?
Yeah, you take that, Paul.
Well, again, a lot of it's based on who the lender is. Some lenders don't want more than one of their properties in their portfolio under one LLC. And it's because of that, if the project goes south factor, it's more difficult to pull one of those properties out of an LLC and individually foreclose or take over that project. Because ultimately, if that does happen, the lender comes in, they finish the project or try to sell it to another investor. So at the end of the day, they're just looking to make money on that, whether it closes within the time frame or they're foreclosing. If it closes in the time frame that you're flipping it within their 12-month note, then they're making the money that they should be making money on that project. But like I said, if the project goes south, it's easier for them to go after the individual LLC that's individually tied to those individual assets in their portfolio. So some lenders allow it, some lenders don't. So it's basically, it's up to the lender eventually. But I've seen it both ways. I've seen multiple properties close under one LLC, but more typically I see an individual LLC for every single project. And typically it's just the name of the property as the LLC. 123 Main Street LLC, 246 Dovetail Road, LLC. Yeah. So they'll create individual LLCs for each individual asset.
Typically. Yeah, that's really good information. So I think maybe we should, seeing that we're on the topic of individual LLCs, how easy is it to set up? Do you want to show people? All right, hold on. I got to get my laptop going. Hold on one second.
I am by no way giving any legal advice here, but I'm going to show you all how simple it is to open up an LLC. And I'm not just going to show you slides on how to do it. I'm going to actually open one up live. And a lot of developers come to us when they're purchasing a property for a fix and flip, or they are refinancing into a DSCR loan as a landlord with investment properties. When they're refinancing into those business type DSCR loans, a lot of them want to put them in an LLC as well. But they'll come to our law firm and ask us to do it. And we will, but I always tell them, I said, you can do it on your own and you can save, a few $100. But I'm going to show you how to do it. I'm going to open up an LLC right now. Yeah, sure.
All right, it's all yours.
So I'm going to actually open up an LLC right now, hopefully without any flaws. Got my glasses on. All right, so we're here. All right, so the first thing you're going to do, if I go like this, Bobby, can you hear me if I just leave the mic here so I can use two hands? Is that coming in okay? Bobby shakes? It's okay? All right. So I'm going to go into the Massachusetts Secretary of State's website, okay? So that's the first thing I'm going to do. Once I get, where am I? Oh, I'm going to look up here. Sorry.
Yeah, sorry, you have to look up at
Can I get that on this?
No.
At the same, okay, that's fine.
Slide it over.
All right. All right, this is, let me see, I'm going to move this guy. No, that's fine. So you can just search Mass SEC of State LLC Search, right? So it's going to go right to their homepage. I can go down. Second one down. Here we go. Corporate divisions. The website is sec.state.ma.us if you don't want to go through Google to find it. So what we're going to do right here is we're going to go into departments. Once you go into departments, you go down to corporations. Once you're down into corporations, you can search the corporate database. Now you want to go there first to make sure the LLC is actually even available. Can't have two of the same LLCs in the state of Massachusetts. They're like license plates, okay? So once you go in to search the corporate database, you want to put in the name of what you want your LLC to be. So mine tonight is going to be Rove Consulting LLC. And you want to make sure it's not taken. If it is, you have to change it. Find something else. Rove happens to be my daughter Rowan and my daughter Evelyn combined. R-O, just in case anybody cares on that. Rove Consulting LLC. Now we're going to search. No records found. All right? So now what I'm going to do is I'm going to go in to corporations again. I'm going to filing by subject. Correct. Filing by subject. Now that I know Rove's available, then I'm going to go down to limited liability company, right to the LLC, okay? The next screen has a couple of options here. These are the forms for PDF that they'll look like. You want to go right here, file online. So simple. People hire our law firm to do this. Trying to teach you for free. All right. So now that we're in filing by subject, we're on the LLC. I clicked on file online. Now I'm going to form new entity, which is right here. I apologize. I can't see on here what's on there, so I'm just trying to, and my glasses are bifocal, so. Click here. Form new entity. So domestic LLC, where are we? Domestic limited liability company, right there. Now, I might need Bobby to do this because I can't see that far, and I'll just tell you how to do it, okay?
Tell me.
The exact name of the liability company, it's going to be Rove, capital R-O-V-E, consulting, comma space LLC. Yep. Then you put in, where's the where will the records be maintained? So do you have an office? Do you have, or a home or office? Mine is going to be 50.
Are we starting one?
I'm going to do one right now.
Oh,
I'm opening one. I'm going to give you my credit card too at the end, so we're going to put it in. 50 Webster Avenue.
okay. Are we putting out?
Yeah, no, put Avenue. There's no second address. It's going to be in Marshfield, Massachusetts. Yep. Someone's from here. Marshfield. I'm missing an F. It's tough, I know. Don't look up here. F-I-E-L-D, yep. And then you're going to go 02050. And we are in the United States. Now, the general character of business. This is where they're going to want to know what type of business this LLC is going to be conducting. And for everybody in this room, it's pretty much going to be for someone that's purchasing, selling, or developing real estate. So I have an exact sentence that we use when we open all of these LLCs for this specific reason. What's that? No, sorry. I'm going to let you know what it is. No, sorry, don't. I'm going to pull the picture up that I took earlier because this is what we use for all of our LLCs. All right. So they want to know what the general character of this business is. So the general character of this business, it's going to type, it's like 2 sentences. The general character of this business, of the LLC, the general character of the business, of the business. We can just type, we'll fix the typos after. All right. The general character of the business, of the LLC, is to engage in the business of acquisition, comma space, development, management, no, development, management. We can do these after. We'll just get it all up there, and then we can just go back and do them, and do the spell check after. Management and investment in real estate, in real property. Yep. Including the performance and of all related services in any activities directly or indirectly related, indirectly, related or incidental thereto. So if anybody wants this, I can always send you the actual. So, yep, you're just going to do the spell checks there. Investment, performance, acquisition.
Nice thing is you write this one time, you save it in your notes.
Yep. And then the, right there.
It is so hard to type when you're not looking at
Well, that's why I'm thinking that just this one right here. Yep, then back one more. There we go. All right. The latest date of dissolution. None. Move on. Don't have to worry about that. Name and address of the resident agent. For me, it's gonna be the same as the 50 Webster Avenue.
So agent name will be you?
Agent name, Paul McRae, MC, R-A-E, capital R-A-E, capital R-A-E, and then comma space junior, and then comma space capital J, capital R. We'll take that. So that's going to be 50 Webster Avenue. So this is where the mail's going to go. This is where everything's going to go related to this LLC.
What if you had St. Claude do it? Would St. Claude be the resident agent?
St. Claude could be the resident agent where the mail would go for that LLC, correct. I happen to have the same for both. 02050, correct.
Fun fact, this cannot be a P.O. box.
Correct, it cannot be a P.O. box, thank you. That's going to be me again. Paul McRae Jr. Mm-hmm. Can you do this capital R? Thank you. All right, so I'm going to be the only member of this LLC. So, and I'm going to be the manager. So, I'm going to be the only manager. I'm going to be the manager here. Yep, he's going to put me as the manager and the only member. So I'm going to be a single member LLC. I do not have a middle name. MC, capital R-A-E, suffix is J-R. No, you can go right to the suffix, I think, right there. And you can do it there. Yep. Business address, same as before, 50. It's kind of repetitive. Webster Avenue. Marshfield, Mass. That's it. And then you're just going to do, click here if the business address for the current entry is the same as the office location. That's me. All right, we're good there. Oh, that's fine. So did you click, can you go back a screen or did we lose it? It timed out. I hope we don't lose it all, but okay. Yeah, we might have lost it all. Yep. It timed out. All right. Well, yeah, okay. All right, so you just want to keep going. If you keep going, he'll show you how to get to the end without putting in all that information. It's very self-explanatory. No, you get the EIN number after. Once the LLC is registered with the Secretary of State website, you will get a username and ID and a code. And
After all that's in, you're basically signing under the penalty.
correct. Yep.
You accept.
Yep. And you review. You can. I don't know if you can accept now, and if it will even do anything. It'll probably stop you. So, yeah. No. So we just got timed out. I apologize. But you can see how simple it is. It's very repetitive. When you get to the end, it will give you a user ID and a code. So you'll have that for your LLC whenever the CID number and PIN number. Anytime you want to go in and make changes to the LLC, you want to add a member, remove a member.
That PIN number is important too, right?
It is. It is.
So they'll send you a postcard and you have to keep that.
Well, yeah, but once they give it to you, you should maybe screenshot. They will email it to you. Yep, they'll email it to you as a part of the receipt. So when you get the receipt for the corporate filings, you are now ready to go get an EIN number.
And then what's the cost for this?
The cost is $500.
So that's something we gotta be obviously prepared for, right?
Yeah. What's that?
If you go back screen
It-
to the corporate filings,
Yeah, go back one more screen. It's on up here, and then you can see the fee on the top right-hand side. If you go all the way to the top of the screen, right there, it's $500. Okay, and that's to open up the LLC, get you in good standing, And then you can go back to the home screen at the Secretary of State's website where we started, and you order a certificate of good standing. It's $25. And usually it comes within 7 to 10 days. But they'll give you a receipt for that, and you can have that recorded at the Registry of Deeds when you close on these properties to show that you are in good standing, especially when you're selling a property. When you sell the property as a part of the LLC that you acquired to flip, your LLC needs to be in good standing when you sell it as well. So a lot of LLCs, the owners or the members or the managers of the LLC will have to go in and file their annual reports with the Secretary of State's website, and you can't be in good standing without doing so. So it's very important that when you're selling the property at the end of the project to make sure that your LLC is still in good standing, because your deed is going to be in an LLC. So you can't deed a property out of an LLC that is not in good standing. So that's that, and I can show you, once you get this process done, I'm going to have to go home and do it tonight. I really wanted that LLC open tonight. But we're going to go to the IRS website, irs.gov. This is where you get your employee ID number. irs.gov. Super simple. Super simple. You go into the apply online button. If you scroll down, can you scroll down more? Keep going, keep going, keep going. Does it say apply? There's a button there, irs.gov. You're on it. Let me just see that for a second, Bob. Could I?
Apply for EIN right there on the bottom. I got it. Yeah, right
Yep, there we go. Apply for your EIN number. Open in a new, here we go. So once you're here, you go begin.
Can you do this first?
No.
All right.
No, you have to have an LLC in order. You have to have the entity set up first. And there's a button here that says begin application. Yep, apply online now. Yep, submit your application. Apply online now. Then you just go to begin application. Just click OK, begin application. This is how simple it is. This is free. You can get your employee ID number for free. You come down, yep, you're going to get your EIN for your LLC. Then start new biz. You hit continue. It asks you for the name of the LLC. So you could actually put, oh, how many members? Just put in one. Just put in one. Yep, just one, the number one. Down here for Massachusetts, where you're physically located. Sorry, I'm probably in your way. Massachusetts, continue.
So this is a
Single member LLC, correct. Yep. That you only continue again. That's it. You started a new business. Because you get a brand new LLC. They're going to ask you for the name of the LLC. My name, my last name, Junior, then my social security number. This is the part where I would have unplugged it and then plugged it back in. But you're the only member right here. Click on that. Continue. No, but no, I don't think. Oh, yeah, you could put my name in there, Paul McCrae Jr. Just put in Paul McCrae, just the stars, because we're not going to go through the whole thing. Oh, I'm going to need the social. But anyway, the next screen is just the addresses. Then the details of your LLC, and then you're done. Yeah, it's very simple. Very simple. And that doesn't cost you a penny. So, is that the fact? Okay. Did not know that. One per day. All right.
Is that from experience, Trey?
Yeah. If you, so for example, I've been in a position to.
I just want to show them
Yeah,
what
no
you
problem.
now have to do after January
Yeah.
1st, too, on that.
Oh, and so just to this point, I've been in a position where I've done it before, and the company wasn't registered. I had the wrong name, so I submitted it after they denied it. Said, nope, this is too similar to another one. So I had to make another company's name. But at that point, I couldn't do another EIN. But luckily, in that venture, I had a partner. Yeah, so then I was able to make it under his. So, yeah.
All right. So the final piece of opening an LLC, brand new this year, January 1st, 2024, is the BOI. So we're going to go to FinCen, FINCEN,
Yeah.
.gov / BOI. This is a brand new law, January 1st. Beneficial, did you go up one too many? Did you go, can you just go back one screen? Did it not say that? Right here. Beneficial ownership information, self-reporting required by the government now. So you have to file a report saying who the beneficial ownership is. Who's the beneficial owner of this LLC? It just started, January 1st, 2024. They've been talking about it for a long time, and it's finally in effect. There are some guidelines with it. There are penalties if you don't. So I want everybody to get familiar with this site, because when you're done filing your LLC, to stay within the government guidelines of your LLC, you have to fill this out. It's also free, but you have to do this.
What about existing?
There is a bunch of information on here, frequently asked questions. If it's an existing one, they give you 90 days after January 1st to self-report the BOI information. Everyone after that, I think, has another time frame. But this is all just so brand new to me. This is 3 weeks old. But if you go in here to file a report, oh no, wait. Where am I? Yeah, file a report. Right there. This will tell you. I don't know the answer to that question. I don't know. But there is a section, if you want to get started. There's so many sections in here that have frequently asked questions, everything you need to know about. It's a lot of information. But if you want to file online, prepare and submit, they're going to ask you for the same information that the Secretary of State's website asked you for on here as well. As you want to agree to that. And then this is very simple again. It's just answering these easy questions. This is your first time doing it. It's today. The Privacy Act, it'll take you right to the next screen. If you agree to this right here. I don't know if you have to click on the bottom of it. Look, this is your LLC information right here. The legal name, the LLC, the alternate name, if there is a DBA. If there's not, you're done. You can add one or you don't have to. This is the tax identification type. This part, you need a photo ID. So I wouldn't have been able to complete this tonight anyway, because I don't have a copy of my license on Bobby's laptop. But you do need to submit a non-expired valid driver's license or a non-expired valid passport. So you do need a photo ID. Other than that, you really don't need much more information other than what you're filling in for addresses and the name of your LLC. In the name of the members. If there's more than one member, you have to include them all in here. So this is something that just started. I can try to get the answer for your question before we leave. Is it annual? Because
The annual report I think it's fundamentally targeted at states where you could have no name. I think it's fundamentally targeted at states like Delaware, if you would, where they don't have to report who's on the LLC. It's like an aliased LLC. So Massachusetts, you just saw Paul go through where every member's name is generally listed, and that's public record. You have some states where those LLCs are actually sealed. You don't see who's in them, who's owned them. So if you can understand from a portfolio standpoint, I fall at ABC 123 LLC, but I can't see who owns it. So your recourse, your action, litigations, these things take a lot longer to play out. And so part of what that FinCEN is to attack that.
Yeah. And I'll say from experience, we've had a lot of wind damage up here recently and a lot of wind storms. One of my friends purchased a house at auction, and it's been vacant, and he hasn't even started the project yet, but the neighbor's tree fell on his fence. So she found him going through the LLC database search. She looked at the registry of deeds, who purchased the property, looked the name up of the LLC and the Massachusetts Secretary website, found his name, Googled him, and finally got his number because she wanted to help him out with the damage to the fence. She wanted to inform him because he hasn't been in the property in weeks. she wanted to let him know that the fence had fallen on her her tree, sorry, fell on his fence. So he called me. He's like, how did she know? And he's like, I'm glad she called me, but how did she know? I said, because we're in Massachusetts and we can find out who you are through the LLC. So that was fortunate for him, unfortunate for the fence. So, but yeah. So again, I will definitely find out about that mandatory annual report to the BOI, but it does make sense because every year you have to get in good standing, and LLCs change, members add, members drop. So. No, so the IRS website to get your EI number is completely 100% free. The BOI self-reporting on the government's self-reporting for the BOI, that is also free. So it is not. It is not. Yeah, the LLC for the state to file your annual report is $500 every year. Every year. Yep. And then the certificate of good standing, once you get your LLC and you get your corporate divisions or certificate of organization receipt, then you can go back to the home screen. It says order a certificate of good standing. If you're not in good standing, it won't even let you order one. Then you'll know. So, but the certificate of good standings for real estate purposes in my world, they're good for 90 days. That's it. They're good for 90 days. So just keep that in mind as well. It's $25 every time you order one, which is on the cheap. So you're talking about $525 to open up an LLC and start running your business, and you're going to get an EIN number, and you can open up a bank account with that EIN number. You can run your business through that bank. It's just so simple. It's cheap, and you don't have to pay someone like St. Clair to do it. It's a little time consuming. You get timed out. Don't let Bobby type while you're doing it, but you can get timed out. Like Troy said, oh, I think he got timed out. I forgot. But yeah, if you get it through quick, I mean, this doesn't have to be as long, but typically that sentence that we were typing in there, that's what we use for everyone's description or general character of their business. So I hope you guys learned a little bit something. You can save some money and do it yourself. Yep.
LegalZoom's probably like $800, $900.
$750.
Yeah, and that's on top of that. So two things with that. I would give you back to earlier. Why do we separate them? Again, it's you're diversifying your risk. All right, I slip and fall in one building. Legally, I can only sue that building, right? And in this case, it's that business. So I slip and fall in ABC 123 LLC, then I can sue that. Although this owner may own 100 other units, you don't have liability necessarily in there, right? And so the other piece is making sure to not penetrate your corporate veils, and that's just a matter of making sure you separate church and state in how you operate, right? Personal finances are personal, business are business. Once you create this LLC and this EIN number, I'd encourage all of you guys to go out to your favorite bank and open a business credit card, right? Open a business account. Fundamentally, those are great. I'll give you, again, free game on this one. I love business credit cards. I do a new project, I open a new one every time. Why? Well, because it's interest-free for 12 months. I know my game. I know how good I am with the project. I'm going to get $18,000 to $20,000 from X, Y, and Z bank, and it's going to be interest-free for 12 months. I can buy all my material on this. I can see if Paul will let me pay him on credit card, right? Now I can float and my cash is still king, right? And so this is diversification, again, of your finances. This is also, again, in the business. So we talk personal financial statement. This debt does not show for you. But on the other side, again, I love a certain bank. I'm not going to name drop, but they give points, and I love points. So if I use 20 grand in material spend, I'm going to get points on those 20 grand, which feed me personally, right? So now I just won on both sides. I got the float on the 20 grand of material. I'm going to sell this house anyway in 8 months. When I close and Paul sends me back that check from St. Law that says, here's your settlement, I go, okay, great. Let me send them their money. I've paid back the bank in 9 months. I still had interest free for another 3. And you win. And so this is another way to extend your capital, right? So when you show up to the closing table and say, I only got 20 grand, it's like, no, you actually got 40. you've got this other 20 from the credit, and again, it's repeatable, right? So as you have those lines, you keep them open and you create business relationships. It's really important. There's a couple of things we can get to, I think.
Yeah, I just one thing came to mind. Troy, you've had LLCs, and this is not an accounting class by any means, but expenses, right? That's another advantage, right?
Correct.
Tax.
There's a right, yeah. So cheat code, I guess, background for me, I had a degree in accounting, so it obviously helps in the space. But to very valid point, number one, the $500 you pay, that's a write-off. That's a business expense. In order to be in business, I have to pay for the business. Okay, so we're gonna write that off. You start talking about building a portfolio, having holds, buying holds. Why is that such a thing? Well, everyone wants to hold the property for three main things, to be frank. You're going to get probably appreciation in the building. If you don't get that, you probably got some good cash flow. And so you're going to cash flow month to month. But then the last thing is that depreciation expense. Something we didn't talk about here today is that management company, and that's something separate as you begin to scale. But if you understand real estate, at the end of the day, as you scale, LLCs become what we call paper losses. And we're not going to get too technical here today. It's the business brought in 20 grand in rental income. We had maybe 17 grand in expense for this to maintain it. You might have had 10, whatever it is, you might cash flow 20 grand. Your 20 grand that you made in technical profit would be paid to your management company. Okay, now that management company takes that as a management fee, and you end up with a company that made no money. But what happens is the great thing of depreciation. Depreciation means the building is losing value equivocally the longer it's been in use. And so there's a schedule where we're dividing that by X amount of years. So that ends up becoming your negative for the year, to be frank. That's what the great ones have, to be frank. And so that's actually a loss. And so now that's deductible against your W-2 income that you pay tax on, okay? And so this is why you'll say what happens in that right quadrant. I own a building, it appreciated in value, I cash flowed on it through the years, and at the same time, I'm vertically integrated, so I have a management company, so I end up with a paper loss from a building that I quite frankly actually paid money on, right? So that's where you'll go with it. And again, why do we separate them is if you have those pretty machines I just painted a picture of for you, if one was to tumble, you wouldn't want them all to, right? So that's why you're separating them.
Good point.
Yeah. So the question is, how do you handle the initial investment into the LLC?
Yeah, I mean, me personally, I gave you the layup already. I'll connect the dot. It takes credit cards on there. I told you open a credit card when you get a new business. So you can equivocally have paid it on a credit card. You can pay it cash, but usually for me, to be frank, it's in an entity that I'm going to be rehabbing. So I've already baked in that soft cost into my number. So you're part of what we went through there, and then you're a member, and then part of your bylaws, you need to have an operating agreement in having an LLC, even if you're alone. To be frank,
As a single member LLC, you should still have an operating agreement as a single member. Not a lot of
people do it.
Not a lot do it.
But you should have it.
You should have it. You should have it, even if you're a single member. However, you need one if you're not the only member. You need one. Yeah, you need an operating agreement. But if you're a single member entity LLC, then having an operating agreement is beneficial. Yeah, they'll ask you. Well, a lot. Yeah, a lot of them. If they say if it's a single member, we don't need it. But other lenders are different. They say even though it's a single member LLC, please send us over an operating agreement. And then when you purchase the home with that $20,000 down payment, I want to know where that house is, by the way, for $20,000 down payment. But you purchase the house in the LLC, and it goes deeded from the previous owner right into your LLC. Right.
Question is,
Whatever money you're putting out of
Right.
pocket initially to buy that house from your own
Yep.
personal
That-
finances.
that's your seed. That's your seed capital investment. That's your capital investment into the LLC, which you're legally able to do. It's equivalently invested in. No different than you can take distributions from the LLC as payments to yourselves. They are taxable equivocally. I mean, it's your money you can distribute. I'll say this: it goes depends on how you structure. To be frank, if you have no payroll. If you again, depending on how you structure, and this is where getting into good accounting and practice and understanding where you plan to go, and this is strategic planning. This is like not living literally today I want to do it, tomorrow I do it. Yes and no, right? There's two sides to that. I think, again, in an LLC, at the end of the day, they cannot hold capital. So anything that an LLC makes or loses in a given year is going to flow through to your personal taxes. Okay, so I'm going to say it again. Picture it this way. Corporations hold water. LLCs do not. The water is the money. Okay? If you own a corporation, it can make a wage, it can make profits, and pay you as an employee to the corporation a salary, a wage. When you own an LLC, it is merely a limited liability company. It's giving you some of the benefits of a company, not all of them. One of them that you're not going to get is it cannot hold money. If you make $1 million in an LLC, that $1 million, after all those deductions in the LLC, whatever is left is flowing directly to your personal taxes as income for the year. And this is why, again, I go back to having a management company is the follow-up to this. That's great, I have an LLC, but if I flip a house and make $100,000, it's coming right through that to my name as $100,000 that I technically got paid from work, but no taxes came out of it. So guess what? You now owe taxes. Does that make sense? Okay? So fundamentally, you want to understand that as you do this, and this is where the preparation comes in. Hey, I wake up this year, I want to flip 5 houses. Great, I love that for you. But what happens when you're successful and you bring in $500,000? Okay, no problem. You can give them half of that, but I feel like you just worked really hard to give them half of that in tax. Again, and it's not to say yes or no, but there's proper tax planning versus tax evasion. Tax avoidance, tax evasion. One's okay, one's not. I want to give it to Paul here, though. So, Paul, my question for the team would be more so in the LLC from soft cost standpoints and closing. Is there anything from a banking side, from the closing table that is a cost that usually slips through for people?
Regarding the LLC?
Yeah, closing in an LLC. Like when they show up to closing table LLC, like prepays are standard. Is there anything?
No, the insurance binder is a big part of it. The insurance has to be bound to the LLC, cannot be bound to the individual. So that's an important piece of it at the end of the puzzle, that we always have to make sure that the binder is insuring the company, the LLC, the limited liability company. The deed matches the mortgage. So we have to make sure the deed is in the proper LLC. There's a lot of times when sellers are in an LLC submitting us their certificates of good standing, and the deed that there was prior recorded deed doesn't match the LLC. It's misspelled. It's missing a comma. These are things that, especially if it's on the registered land side of the Registry of Deeds, which are more strict than the recorded side of the Registry of Deeds, they have to be very specific and exact when it comes to the spelling of the LLC on the deed and the spelling of the LLC on the binder. But other than that, closing in an LLC is no really different than closing as an individual. Fees are just getting the LLC. There's no additional legal fees at closing because you're closing in an LLC. No, there's really nothing.
So speaking of closing in an LLC, what if you sell the property? Are you closing down the LLC?
Yeah, you dissolve it. Yeah, you can that's the word I'm looking for when you get dissolve. Yeah, just the dissolution of an LLC. Yeah, you can just dissolve the LLC. Yeah, and but you do need to be in good standing when you're selling it. to make sure that you are in good standing. So it might cost you another $525 to get in good standing, to file your annual report and get the new certificate of good standing. It's, again, only good for 90 days. So it's going to cost you an extra few bucks as a seller in an LLC than it would as an individual.
So the question I had is, if you purchase a house under an LLC, and typically if you own a house for 2 years as an individual and you sell the house, right, you can negate the taxes. Does that differ with an LLC?
Yeah, so that, usually the IRS guideline on that is if you're owning a property for 2 years and it's your primary residence, then you're exempt from that. So you can take the whole net proceeds and you're not taxed on it. But right. So there's a little bit of, additions to that, but that's the quick answer. So in an LLC, it's different,
Correct. Your 2-year goal of getting to 2 years, what you would do is you would avoid short-term capital gains, which is very steep, to be frank, and you would just end up in a long-term capital gain if you sold it and just wanted to truly cash out, or you would enter the world of 1031 exchanging, and that's rolling those, but it gets a little bit more tricky. You got to identify the property and you think, yeah, it's tighter now. Yeah, they give it's like 9. 6 months ago, yeah, I was like 9. With COVID, it had been all over the place. Yeah, I've never done it. Don't have the patience, but.
Well, that's a loaded question, Craig. Yeah.
Let's split it up.
Let's split it up. I'll take the Schedule E part. So Schedule E simply means that you're holding these properties in your personal name, and on your 1040s, that's your federal tax returns, you have a Schedule E, which you can list all your properties, and in that Schedule E, you're going to do, like Troy said, you're going to have gross income, you can have depreciation, you can expense taxes, insurance, mortgage interest. So all those things are beneficial on a Schedule C. And most of the time, we do actually, on the residential side, we see losses. But that's okay, because we're able to add back in depreciation, taxes, insurance, and mortgage interest. So usually it works out really well for that borrower that is doing the Schedule E piece. So that's the quick answer to Schedule E and holding a property personally. But an LLC is a little bit different. You want to talk about that?
Yeah. It's, so just to his point, even right, because Barbara said a good point is, end of the day, adding back, and if you understand mortgages at the base of it is, generally speaking, it's on gross income. And so when we get back to in the residential, looking at your Schedule E and doing add backs, that's just getting you back to the gross number. How much money did this guy really bring in, right? And again, understanding in the LLC world, we're looking at you as a business. So we understand that the business has to be recorded in a certain way, but when we have those documents, i.e., your 1040 Schedule E's, those things, but in the LLC side, it's really just books. To be frank, it's your P&L on the property, profit and loss. So it's the same categories. What was his income? What was your expenses categorized out? What's your interest? Those things are add backs as well. But fundamentally, it's your property is it's really debted and obligated via debt service coverage, fundamentally in that side, and that's just meaning debt service coverage ratio, DSCR. And so that's taking your debt and looking at the income as a function and his ability to service the debt, meaning, generally speaking, that criteria is usually like 1.2. We take it at the big box meets middle box. These guys have some really good products that get you in more creative places than that. But really, what it really means is for every dollar of expense, we want to see you bring in $1.20 in income, right? Meaning that after you pay principal, interest, tax, insurance, you still have 20% of profit. And that's just the bank pretty much saying, can he cover himself if he doesn't get rent 1 month, if things go out, right? And that's that mitigation. And so when you talk about being able to qualify, it takes you as a personal debtor or as a borrower out of the equation. Although you become stronger when you can show up with good books behind you personally as well, right? So if I'm coming and the deal looks good, and it's a 1.2 debt service, you might feel even better now if I go, hey, I got a 780 credit score and I'm making X amount of dollars. Like, that just makes you more firm. And in the world of LLCs and borrowing, to be frank, the worse your personal profile looks, the better your deal should look. Does that make sense? So that $20,000 house, right? If you got a 520 credit score, we're gonna need to hear that you got a house in Boston for $300,000. It's a 3-family, right? Joking, but you know, sufficiently, that's where the lever comes in asset-based lending. You can get more accomplished in that regard because the deal is where the equity is, and to be frank, that's where the borrower, it's where the lender is going to find their solitude. I'm going to lend you 200 grand on an asset that is probably worth $1.5 million. I have no problem with that, right? Like, they're going to be able to do that over if you mess it up, and at the end of the day, you're on the hook. So it's covering itself. It's going to cover itself, right? So that's where it is. And end of the day, most of these guys are in the business, no different than the banks. They're in real estate. I mean, they're not in it to rehab and renovate, but they're in the business. They're in it to transact. They make money by completing transactions, right? So it's going to be right up their warehouse. I think that roundabout way, probably a lot more words than needed, but I hope it was a helpful answer there. Anything else?
Anybody else? Questions?
Or a second property on an LLC? Or should you? Yeah, the question is, can you put a vacation home or second property on an LLC, and is that a good idea?
Give you time to think about it.
I already know my answer, unless someone else does.
I know the answer too.
I'm going to say that you can put any property in an LLC, especially if you want to limit your liability on a vacation home, right? But also, when you change the deed on an existing mortgage, the mortgage company may have a big problem with that. Because remember, in Massachusetts, the deed has to match the mortgage. You can't have a separate, I can't have Paul McRae Jr. on my mortgage in Marshfield, and I can't have a Rove LLC on my vacation, on my mortgage, but I can't have my deed say Rove Consulting LLC. My deed has to match my mortgage. So if you should let the mortgage company know that you're changing the deed, because they might not like that. They definitely probably wouldn't even want it. They wouldn't allow it. Right, and I think at the end of the day, people do it. It happens. People put them in trusts. People put them in revocable, irrevocable trusts. People put them in LLCs. People take them out of LLCs. People play games with deeds a lot. But I think at the end of the day, if the mortgage company finds out, you could get in real trouble. And they could call the note. They could call the note on you. Yeah. Lenders won't, yeah. On a residential purchase where you're closing as your individual, lenders won't let you close in an LLC if it's already in one. So you're refinancing. If out of an LLC as an individual, they won't let you keep it in an LLC. They make you remove it from an LLC prior to closing as an individual before they'll close on a residential loan. I'm not talking about, closing in an LLC on a fix and flip with a hard money lender or into a DSCR business type loan, where that is required in most cases. But putting it into an LLC without the residential lender's permission is a no-no.
Yeah.
Just real quick on that, the second home question. I think we already assumed that you might have owned it, right? Let's say you didn't own when you're buying a second home. You can absolutely purchase a property, classified as an investment property in the type of lending we do, which is asset-based lending, and have it in an LLC. And then, maybe you're doing Airbnb or, for 3 months a year and stuff like that. That might make the most sense. If you're buying a second home, you can just classify it as an investment property and go from there. But I think
Yeah.
Troy was going to speak to.
I give you 2 things on that. So there's 2 sides. Financially, there's a side where it makes sense and it doesn't make sense, right? It's just to be frank. So when you buy it in the LLC, you're gonna have a chance, if you're renting it, to your point, to be able to save some taxes on that income you're gonna generate from there, because you can run it through what we mapped out earlier, and that's gonna be appropriate to do that. Whereas if it's in a residential in your name, it's a little different, right? But what you're gonna see is you're also gonna have a higher tax rate on that property, generally speaking, because it's in there. Your interest rate on an LLC is gonna be a little higher as well. You're still gonna run into, on an LLC versus residential, because you're doing it based on its debt service ratio, is that appraisal is also gonna appraise its rental marketability. And I'm speaking for, I have a place in Rhode Island, and so it's waterfront, it's beachfront, so it's that. But it's important, there's seasonality to vacation homes. So if you pick an area that is very seasonal, i.e. summer months are amazing, the other 9 months are not, it's gonna happen and come into your appraisal. And this is where being very good on your numbers come in. So sufficiently, I would say that if you're going to do something like that, especially when you're in a place where you're offering and you're doing that, you want to make sure you're doing that rental market analysis. You have good numbers on it. To be frank, you may find that your cost basis might be better to actually buy it in your name, contrary to belief, especially if it's a single. Just to be frank, single families, debt servicing is, it's not a hard thing to do. But it's more intricate, and if you add seasonality to it, it's a little tougher.
Big on the islands, the DSCR single-family homes.
Yeah,
Yeah, Nantucket.
yeah,
Indeed.
yeah,
That's where we do most.
yeah. I'm down in Newport, and
Another one.
it's amazing for us. I love it, but there's that piece of it. Anything else? Appreciate it.
Hey, if you get 1 or 2 takeaways from this, that's what we're looking for. This is an educational series that we're putting together to invest in investor financing. Investor financing is on the rise right now, and there's a reason for it. Is because people are realizing that you can build wealth through real estate, and we have the ability of our experts to help you out, and kind of walk you down that path. That may be advising you maybe not to do something. Maybe it's too big. We talked about something earlier. Or, just like I said, giving you advice on LLCs or, the BRRRR method, which is, buy, rehab, rent, and then refi. That's a very interesting thing that Troy has just been phenomenal at. Our next seminar, we're going to be talking about fix and flips. So that's another good topic to get into and start to learn about it, because you're going to have people that you can lean on and ask questions to. But yeah, that's really the ultimate goal of these seminars is to get you guys in a position to have confidence in being good investors, and we can obviously help with that on the financing side, the legal side, all that stuff. Craig, do you have the YouTube Live subscription, or Andrew, do you have that, the YouTube Live subscription for Dovetail Commercial? The YouTube Live? We'll pass it around. I think you got to click the link. Do you? I might have it, but sorry. Go ahead, Paul.
I just want to add one more thing. Since we did get timed out doing the live LLC, if anyone does have any questions, if you're attempting to open one, just call me. I can walk you through it. So very simple. Like I said, we got timed out, but you can see how easy it is. And then you just pay at the end, and then you get your receipt, and you're ready to go. But if anybody has any questions or gets stuck along the way before you get timed out, just call me or text me. I'll give you guys my information, and I'll be glad to, for free, help walk you through it. So that's my 2 cents right there.
I guess I got some closing regards. Yeah, I don't know. I whatever. I'm here to help. Any questions you guys have, honestly, and I think it's my biggest thing to leave you guys with is just be creative. Like, actually be creative. Think outside the box. Like, this is simply an equation. It is just an equation. That's all it is. And once you understand the equation, you figure out what suits you. And what makes investors, to be frank, is that most of us have a unique niche, path, creative skill set, and you take from that part of your everyday, and that's what you bring into this. You know, I have a degree in accounting, so I'm really good with the numbers, and I figured out what I wanted to do in that world. I learned the construction through time, right? But I think if you can really just find out what your niche is, like, what don't you mind that other people mind, or what do you see that you don't, that others don't? You know, like, I rehab things and rent them Section 8, generally speaking. Most people are like, you're crazy. I go, I'm not crazy, because I literally pick every single tenant. My average tenancy is 3.5 years. People leave me going like, man, I hope my next landlord is as good. I wouldn't move if I didn't have space, these type of things, right? So that's what you lean into, and over time, it really grows.
Free internet.
I graduated from YouTube U. I graduated 10,000 hours on that thing.
No, you're providing your tenants. You provide your tenants with free internet.
Oh, I do. Well, I have. It's $25.
Sorry.
But it's an amenity. It's an amenity. It's a nice one, cheap one. You can't
That's
get internet for
thinking outside the
25.
box.
Think outside the box. I have flat rate laundry in some of my buildings, right? I took average costing, and I'm like, all right,
Outside the box.
flat rate costing, and then you look at it and you go, man, like, they don't got to go out. They're happy to spend it, and then you realize where's your benefits. And again, these things over time, you're human, you know, especially mom and pop built portfolios are some of the best. But to be frank, most of us, we don't get up here and do this. Why? Because you don't really need to. You found your lane, you get comfortable, and you go, right? And so it's one of the nuances, and so I really appreciate, especially guys at Dovetail, to put this on, because it's important. You know, it's important to show people that you're working really hard and there's a way out. You know, you're not that far. So just being here today or being on the live, that's half of the step, to be frank. Just willing to accept new information. So kudos to you guys.
Yeah, okay.
Oh, nice.
I'm going to tap you in on that. Okay. That's all right, because it says same button.
Are we out?
What I'm going to say is that I'm thinking of a number. And if anybody gets the number, that's who gets it the closest to it. So we're going to go right here first. Right there? Right here? Okay. Okay, now, if I hear it, I'm not going to say yes. Okay? There's a number 1 to 10. 1 to 10, by the way. So go ahead. What do you got? 1 to 10. I have 10 people. I have 10 people.
10 people here.
No, I don't think so. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So you want to start again? 7, 9, 3, 2, 6, 5, 7. 7 right here. Right here. All right. Hey, I thank you everybody for coming. You know what? We're really trying to show some really good content over here at Dovetail Commercial. You know, we're excited about the opportunities that present themselves in the investor space. And the DSCR loans that we're referring to over and over again, You know, they're a really good product to utilize as compared to Fannie Mae and Freddie Mac financing, because what I've found is that they're super easy to use. You know, sometimes the down payment for investment properties are so significant where you can't rely on any gifts and everything like that. The DSCR loans that we offer allow for a tremendous amount of flexibility with down payment. And as long as it's a 1-for-1 ratio, right, is a client of ours right here. As long as it's a 1-for-1 ratio, bring in $4,000, the mortgage pay $4,000, that's an approvable loan. That's a really harder journey in the Fannie Mae Freddie Mac space. And what Fannie Mae and Freddie Mac did to get this DSCR loan out front, if you will, is they got up with all of the folks that were doing second homes, but then they were kind of doing the Airbnb on the side with the second homes, right? They were buying them 10% down, 5% down, whatever the case may be. And Fannie Mae and Freddie Mac caught on to this. And what they did is they implemented some loan level price adjustments that were ratcheting those rates up. And when they did that, we realized that we had a marketplace that was going to emerge, where it's going to be a little bit easier to get these loans done. The down payment was going to be similar, going to be a little bit more flexible in how you can arrive at that down payment. And it's going to give you more borrowability, if you will, because it's a dollar for dollar rent. All right. So I do think that why we're looking at the opportunity to offer debt service coverage ratio loans right now is because they're a meaningful market mover. These guys here, they're sharing with you kind of how the steps are to get there. But I don't want to lose the why and all of the steps and whatnot, because basically it is an easier way to go about it, especially with LLCs, because within the LLCs, you can develop partnerships and make it easier to buy investment property with people that you know, like, and trust. Whoop.
Yeah, so I said once we cut this, we can give some in the room only.
Actually done.
Well, that was good. You head down the road of in the room only. Yeah, no. Sometimes you got to only give people in the room some of those nuggets. Yeah. No, the people.